Well, hello, everybody. Welcome to a really big show we're going to have here today. My trusty
alcohol levels are up.
Alcohol levels are at an all-time high as we slam drunkenly into the Christmas season here. My trusty right-hand man here, and he is on my right.
I'm here.
Edward the Head Milewski, also known as Special Ed.
Special Ed.
Special Head.
Ed the Head.
Ed the Special Head.
And
Ed's not dead. Anyways, lots of interesting things happened today. Big news of the day was the announcement, and yes, this is more important than the Fed raising the rate by half a point.
Yeah.
But Aleafia and Emblem merged.
Is it a merger of equals, or is it a merger?
No, they're 0.8 of a Emblem share. Basically, the Emblem shareholders end up owning about 40% of Aleafia.
Should we look at the chart of Emblem right now?
We could pull up the chart. I'm not sure whether it's been halted or still traded, but we have both CEOs here for an interview today to talk about the value proposition, the accretiveness of the combination, and why we should be happy as shareholders of Emblem despite a mere 27% premium, was it? Don't hold me to that, but it was not, it wasn't groundbreaking, but we end up owning 40% of the shares of Aleafia, and I think that's probably a good thing. Anyways, but we'll let Nick Dean and Geoff Benic, who are going to be here in a short while, to discuss that. We're also going to talk to our stalwart and intrepid writer, Benjamin Smith, who's going to be here at 4:05. We're going to have the CEO from MJardin Group, Rishi, is going to be here. And we're going to show you some of the top moments from Midas over the last year as part of our commemorative year look back. We've had a lot of fun here in the year, haven't we, Edward?
Lots of fun.
But first, let's listen to Ricky Gerwitz with the news. The news nurse is here.
Go, Ricky.
Thanks, and here are the headlines moving markets today. Some big news. Aleafia Health is set to purchase Emblem Corp. Aleafia will acquire all of Emblem's issued and outstanding common shares in an all-share transaction currently valued at approximately $173.2 million. The agreement calls for Emblem shareholders to receive 0.8377 of an Aleafia common share in exchange for each Emblem common, representing the equivalent of $1.21 per Emblem share and a premium of 27% based on the closing prices of Aleafia and Emblem shares on the TSX Venture Exchange on December 18, 2018. When the transaction is completed, it is expected that existing Aleafia and Emblem shareholders will own approximately 59% and 41% of Aleafia, respectively, on a fully diluted in-the-money basis. The transaction has been unanimously approved by Emblem's Special Committee and Board of Directors. Wayland Group's Board of Directors is assessing the potential spin-out and/or European listing of its international assets. They hope to unlock the value of the company's international asset portfolio and its underlying domestic Canadian assets. Any spin-out transaction of the international assets could include the company's European, Latin American, and Asia-Pacific operations. CannTrust Holdings has issued an update to highlight recent developments regarding the company's expansion plans. CannTrust says its Phase 2 expansion is on course to bring the company's capacity to 50,000 kilograms per year. CannTrust expects first harvest from the expansion in Q1 2019, and construction of the final range should be completed in January 2019. In addition to its Phase 2 expansion, the company has proceeded to build a 35,000 square foot greenhouse facility adjacent to its current greenhouse. This facility is also fully permitted. Agriflora Organics International has acquired a 100% interest in London, Ontario-based licensed cannabis producer AAA Heidelberg Inc. Agriflora has issued more than 12 million common shares at a deemed price of just under 17 cents per share to the shareholders of AAA Heidelberg, pursuant to the share exchange agreement entered into between the company AAA Heidelberg and the shareholders of AAA Heidelberg, dated January 26, 2015. Cannabis Growth Opportunity Corporation, a cannabis-focused investment corporation, has announced the company's updated net asset value per common share of $2.40 at the close of business on December 17, 2018. This represents a growth of 3.5% since their IPO at the beginning of this year. CGOC is now approximately 92% invested in companies operating in Canada, the US, Jamaica, and Israel. Canopy Rivers Inc. announced that its shares have received DTC full service eligibility in the United States. The company's identifier is CNPOF. DTC eligibility enables shares of Canopy Rivers to be distributed, settled, and serviced through DTC's automated processes. High Hampton Holdings Corp. announced that its fully owned subsidiary, Mojave Jane LLC, is set to commence full-scale production in cannabis-friendly Coachella City, California, in January 2019. The 2,500 square foot production facility is licensed to produce both volatile and non-volatile extractions. It's capable of producing approximately 115 liters of clear distillate per month. And that's your news for today.
Interesting news there.
Lots of news.
Yeah, lots of news.
You get the sense there's some consolidation going on.
Yes.
Like,
what better time?
M&A activity.
There's two times that markets consolidate: when the share prices are all in the crapper, or when the share prices are flying.
Yeah.
When they consolidate, when the share prices are in the crapper, it's generally a good deal for everyone. When the share prices consolidate, when they're at their all-time highs, it's usually people are fear of missing out kicking in, and they pay too much. Would you say that that's a fair generalization?
Yeah, I get the sense that there's strength in numbers because it's been depressed.
Just ask the wildebeest. The wildebeest know their strength in numbers.
Really?
When the lions move in for an attack, is there strength in numbers? Is it better to be a lone wildebeest?
Yeah. Yeah. I've been thinking about that one.
There's my analogy for the day.
I like the idea though. Like, companies are snapping up other companies.
Yeah.
Snapping them up.
Yeah. No, it's good to see. It's good to see.
When you go to a restaurant and have the turtle soup, you say, make it snappy.
That would be snap and turtle stew.
Okay.
The merger between Emblem and Aleafia. I mean, that is such a logical transaction to me.
Is it?
Yeah, it really is.
Why? Because I don't know about Aleafia because I've interviewed Geoff.
Yeah. So Aleafia has 60,000 patients across 22 clinics, and they're expanding to 40. But they don't have the ability to supply those patients directly. Emblem, on the other hand, has the capacity to produce cannabis products for 60,000 patients, but they don't have 60,000 patients. So boom, solves two problems at once. Done at a reasonable valuation. The market will take this stock much higher, in my opinion.
Which stock?
No, I don't own any stock, nor are they a client.
Aleafia is the one you want to own now.
Well, yeah, because they bought Emblem, so that's the only option in this whole transaction.
Yeah. If you don't hurry, you won't be able to buy EMC anymore.
You won't be able to buy EMC anymore. No, that's true.
Okay. Well, that's
I'm
interesting.
going to turn off my ringer just because we're doing a TV show, and it's rude not to give it 100% attention.
High Hampton's news I thought was interesting.
High Hampton, now finally, High Hampton does something. Thank God. High Hampton's been wallowing in the muck of anonymity and ill repute for the last year.
I got to think that's a lot of tax loss selling on High Hampton today. Couple million shares down to 20 cents.
Yeah. Well, we're coming up to the last days of tax loss selling. I did some tax loss buying today.
Well, that's the smart move.
Well, it's actually not. Oh, it is though, isn't it? No, I'm going to start doing my tax loss buying on.
No, it's not. It's stupid. Oh, okay. Who twisted your arm?
Yeah, I don't make smart moves. I only make dumb moves. No, whoa, soft there, young fella.
We should have a little bar set up right here we have a bartender.
Why do we need a bar when we've got Suzanne? Suzanne, a couple of rum and cokes over here, please. No, just kidding. It's very unprofessional to drink on screen or on stage. In fact, in Hollywood, need I say more?
Well, they drink out of coffee cups, eh?
Well,
yeah, it's a bit.
You know where that's going. Did you see that film with Lady Gaga, where her partner's just a raging piss tank? Anyways, he ends up coming onto stage during an award ceremony with peeing his pants. And I don't want to see that happening to you again, Edward, because that would just be a little embarrassing.
in other words, 3 strikes and you're out.
That's right.
Yeah.
We don't want to be having to put diapers on the co-host here.
Will you wear diapers on the show, Edward? Depends.
Depends. You'll never guess what he's wearing under there.
Yeah. You ever notice I never go to the bathroom? I just once in a while yell out a sigh of relief. What?
Is that what that smell
And then
is?
I hear this, then I get this from you. Like, what's that?
Pew. Pew. Hey, you know who I don't know if he still is, but you know what the biggest grossing YouTuber calls his show? PewDiePie. PewDiePie. Have you ever watched this PewDiePie's little show? It's like I believe there's extreme hope for us, Edward, because this thing makes absolutely no sense to me. It's just crazy. And Suzanne, is that the news item I was looking for?
I think so.
Why don't you just come on and make a brief
here's the
cameo
lovely
appearance
Suzanne.
here? Come on, Suzanne, we need the news. Come on, Suzanne. Bring Suzanne.
Oh,
Yay,
Suzanne.
everybody, say hello to the lovely
Suzanne.
and talented Suzanne Garcia, who keeps all our lives in order.
Yep. There's hope for all.
So I wanted to talk about the Wayland Group press release there, because this is also a spectacular development. Now, I must disclose that Wayland is a client of our media production and traffic generation division, and I am a shareholder. I bought quite a bit of shares out of the market. I am kind of underwater on those shares right now, but I think that has more to do with the fact that Jerome Baker, the Fed guy, he came out and raised rates anyways, despite Donald Trump's admonishment that he better not, or that it was a dumb idea. So that's quite incredible, for the guy to go right against the president. It's basically,
I think he did it on purpose.
you think he had no choice but to demonstrate the independence of the Fed to the administration? He said, you've tied my hands. Now I have to come out and raise rates, because you've basically made it seem like if I don't raise rates, then I'm taking my old marching orders from the White House. And that can't be, though that is generally the reality when there's a sane president in the White House, it's certainly not the reality when there's an insane president in the White House, which we have now.
You know how for every view there's an opposite view?
Yes, they call that a difference of opinion.
So, we saw rates go up here, and you're saying, the president says don't raise rates, not good. But there are groups that want rates to go up, like life insurance companies and financial institutions. I don't really understand that game because I've never really been in it, but you need to have rates, the longer term rates higher, a normalized yield curve.
Right.
Anyway.
Well, but pensioners who are the most vulnerable to low interest rates because they're pensioners and they need that interest. They need their interest. So whatever. Wayland does this announcement where they're spending out their European assets into one company.
Right.
And keeping their Canadian assets in a separate company. So shareholders of record, and this is why I'm happy to disclose I'm a shareholder of record, get a free share of the new co for every share of the old co that they have. So we get two.
So that's not really,
that's
sort of an opposite transaction to what I was talking about consolidation. That's the opposite, right?
Well, it's a spinout.
Yeah, but that's not a M&A. That's not mergers and acquisitions. That's a
Sure
spinout.
it is.
Spinout.
Well, let's see. Is there an advisor listed in this?
Advisor?
Anyways, but so they've got their German assets, their Swiss assets, Malta, United Kingdom, Italy, all in one company. Latin America, Argentina, they're in Argentina, Colombia, and Australia. Now, I look at the share price of this company, and I know why the share price is lower. It's because they took money from MMCap, and MMCap are short strategists. And they are either covering a short position by participating in your stock.
What's the ticker again? WAYL.
WAYL.
Yeah.
Or
CNX.
CNX, yes.
Let's just see here.
Anyways, we're going to chew through all that paper.
Okay, now that's popped nicely. Okay, wow. Look at that. That was down to 90 cents in the last couple of days, and here it is.
Wayland.
Yeah. $1.05.
$1.05.
Good 15%
okay.
move there.
So is it up on the day?
No.
Right. Okay. Oh, so it's still halted, from what I'm seeing. Wayland American Group puts itself on block. What the hell?
Oh, What?
Oh, okay. This so this press release here. This doesn't make sense.
Let's get the right press release. Don't tell them tomorrow's press release. Just save that for tomorrow.
December 19th. Right. Oh, okay. They've initiated a process to explore a broad range of alternatives. Oh, including a spinout. Well, that's interesting. That's okay. Great. Well, that's an interesting transaction. I think the company needs to be a little bit more definitive on that, because that uncertainty expressed in exploring alternatives generally is viewed as a negative by the market. So we're going to get some clarity on exactly what they mean by potential. I think we'll see more releases from them in the days ahead. Anyways, Ed, the results of the hiking of the interest rates are generally negative. Wayland is now up a penny, $1.06.
You know, the S&P is
Tanking?
it tanked. It's rallied a bit from about
President's Working Group on Capital Markets
10
kicking
after
in there?
3. Yeah, maybe Trump's buying some stuff in his own account. Get some
I would think Trump
bargain hunting.
would not support the idea of the President's Working Group stepping into the market and propping it up. Anyways, Ed, we've got a guest that we're going to talk to now, and that's Rishi Gautam. He's the executive chairman of MJardin. I said the CEO. That was a mistake. He is the executive chairman, and he's going to. There he is, right there. Hey, Rishi, how are you?
Hi, Rishi.
Good, how are you?
We're great, thanks very much. I think this is our first time chatting, isn't it, Rishi?
Yes, it is, yeah.
Okay, cool. Well, let's start with give me an overview. What is MJardin all about?
Sure. MJardin, we're based here in the U.S. in Denver, office in Toronto as well. Consider ourselves a multi-country operator. We've been operating cannabis assets in the legal cannabis market since 2009, when Colorado first turned legal. We have a portfolio today of just under 40 facilities, cultivation, extraction, and retail across North America.
40?
Intention 40, that's correct.
Wow.
And with intentions to expand into Europe as well. So full operating engine, we do cultivation, extraction, and retail management of assets, and we're an owner of assets going forward. As we build out our portfolio, we're doing so as a principal owner-operator in key markets in the US, Canada, and soon to be Europe.
Wow, that's quite the footprint. What's your revenue look like for 2018?
So revenue in 2018, we are morphing our business from an agency model to a principal model. So over the last 9 years, we've been operating assets as an agent. So if you have a cannabis license in Nevada or Colorado or other legal markets, and you may not have the depth of expertise to monetize that license and asset, you would hire someone like MJardin historically to come in and run that asset for you turnkey. The operations, the HR, the genetics, everything that would require a full monetization of that asset. So we have a legacy business of agency revenue and profit. We've been profitable last year, we're profitable this year. 28 million revenue USD run rate for this year. And as we're morphing into our principal model, we're now taking on assets that we're going to own and operate. We will expect to see a significant jump in our EBITDA profile with those ownership economics.
Wow, that's impressive stuff, Rishi. So I'm looking at your share price. Certainly the current general market weakness is not helping any of the cannabis companies, but it sounds to me like you're more or less an undiscovered gem, a profitable company with 40 different facilities. You said $28 million run rate?
Correct.
Okay.
USD. Yes.
Okay, interesting. Wow. So tell me about how is it that the market doesn't know your story yet? This is a new one on me.
Well, we are a gem, like you said. Now it's just a matter of other folks discovering who we are, what we do.
Right.
We have certainly prided ourselves as an operator first and foremost. We've invested into our business, developing software, developing a university system. We have just become public just under a month ago on the CSE, and now we're moving forward with investor relations and public relations, getting our word out. So it's a process, as we all know, but we are a profitable company. We have the most operating experience in the space, given the years that we've been doing this. So we're getting the word out and talking to good folks like you about what we're doing.
Right on.
How much money did they raise when they went public?
How much
There's a
money
small
did you
amount,
raise when
20
you went public, Rishi?
Small amount, 26 million CAD is what we raised. And we also did an acquisition of a Canadian business called Growforce, which was a sister company of ours. So our Canadian operations and our US operations are now wholly owned under one roof, which is MJardin Group. So in total, we have 50 million of cash on the balance sheet today, fully funded. We don't need to go into the markets at these volatile prices today. So we have the cash we need. We have our strategic plan in place, and we're heads down executing on our business.
Wow, that's fascinating stuff. Where is it that you? How much cannabis do you sell in a given year from all of your operations?
So if you take our entire portfolio and you take the full capacity of what we can produce, it's over 80,000 kilos. And you'll see that more reflective in our 2019 numbers as our Canadian portfolio evolves and turns from cultivation license to sale license, and we go through that process of bringing that product to market. So the number to keep in mind is over 80,000 kilos of funded capacity in North America.
Ooh, that's a lot.
And we have
okay.
locations, and we'll have retail locations in the near term as well in Canada.
Huh, fantastic. Awesome. So are you operating in the United States at all?
Yes, we are. So we're based, I'm doing this interview here from our office in Colorado. We have an office in Denver. We have assets in Colorado and Nevada today. Soon to be other locations as we expand through acquisition. And we have assets in Canada as well. So about 350 people in our business today at the operational level in various facilities. And we have about 35 people in our corporate staff in Denver and Toronto, and soon to be Europe in Barcelona.
Mm-hmm. I see that you've actually designed and planned over 100 facilities. So you were in the business of equipping cannabis would-be growers before you actually became one yourself. Is that sort of how this whole thing got started?
Essentially, we started as an operator. So folks would come into the space, get a license, put some money together, and it'd run into some sort of brick wall, whether it was operationally or capitalization, and they needed an operator to help de-risk their business. So we were called into numerous occasions, numerous types of facilities, the good, the bad, the ugly, and we were put in a position where we had to monetize the license. So that operating expertise, we're now translating to be an owner-operator in markets that we want to be in. We have a very selective acquisition approach. We want to be in markets where we can generate real revenue, real cash flow today, rather than paying to wait, as we've seen throughout history in this very short duration of the cannabis industry. It takes a long time for certain markets to open up and really get healthy revenues, healthy cash flow. So we want to pick our spots wisely, use our capital wisely, and go into markets where we can have a real revenue profile on day one. So that really narrows down the approach of where we're going to go. And within those markets, we want to find the right assets. And because we have this operating engine, 350 plus people doing this every day, we can send in people to diligence assets. And frankly, we know the assets better than the owners do when we take a look at some of these facilities. And we're able to know very, very succinctly from the operational standpoint and the usage of capital where we can generate the most return.
Huh, that's very interesting. It's very refreshing to hear. That's an excellent model. So are you still in the business of helping other LPs who might be hitting the brick wall, as you said?
Currently, we are not. We are focused on our own portfolio, expanding our portfolio as an owner-operator of assets. We've done that historically. We've done that for over 9 years. We've de-risked a lot of assets. But today, going forward, we have capital. We have a strategic plan to acquire, and we're executing on that plan to do it for ourselves, not for other LPs.
Wow. That is such a great model. I'm excited. I can think of a dozen companies who I would introduce you to if you were still in the business of helping them. But of course, I understand why you're focused on your own growth.
Yeah, sounds like he's really knows what he's doing.
You bet. Okay, so Rishi, what do you got in store for us in 2019? I mean, it sounds like you guys are equipped to really bust it out, sort of in 2019.
Well, we have a great board and key stakeholders. We have a strategic plan in place to acquire certain assets and markets, again, that fit that acquisition philosophy I described earlier. So stay tuned for that. We have a great plan to expand within North America. We put boots on the ground in Europe, and we plan to expand into Europe as well. We see some very low-hanging fruit at attractive valuations right now for us to come in and utilize our operating expertise to de-risk some of those assets across the pond. So look out for some near-term catalysts. We're going to make some very smart moves in the market using our operating capital and operational expertise.
Well, that's fantastic. We're going to send down our camera crew to check out some of your flagship operations, if that's okay with you. It sounds like a great story, and I wish I'd heard about it sooner.
There's still time. You see the market out there, so there's still time.
Exactly. I'm going to do some tax loss buying today.
Sounds good.
Okay, Rishi, well, that was fantastic. I really look forward to meeting you in person the next time you're in Toronto, and I hope to see you in Colorado when we come down and shoot some footage of some of your operations.
Absolutely. Happy to host you. Thanks for your time.
Thank you. Bye for now.
Thank you.
Wow. $28 million run rate.
It's never been lower than where it's trading right now.
Really?
It's never
what's
been
the share
lower.
price? Pull up a chart on that, will you, Edward?
It's up.
Oh, it's up on the NDI. There we go. Whoa,
Yeah.
look at that.
When you said you wish you had heard about it earlier.
Yeah. Wrong.
Wrong.
I heard about it at just the right time.
You heard it, yeah. No. Now what's remarkable is that there's 1, 2, 3, 4, 5, 6 green candles, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 red candles out of 25 days of trading. I mean, this guy sounds very sharp. They sound like they know what they're doing. This is a business. This has got what's it got? It's got a lot of things going for it.
Profit. That's what it's got. It's got profit, expertise, manpower, market share, 40 operations.
Yeah.
So this is.
And how much did they raise? Because my thing shut out.
Yeah, I didn't hear that either.
Okay.
I'm trying to find it. 36 million. 26 million.
26 million.
I'm going to look at that transaction because I'd be interested to know who raised them the money, because it looks like they placed the money with.
raised them.
Oh, really? Okay. Well, so
it's probably they're all paying.
This thing's gonna be a gift. I'm just gonna put it out there that I am going to start. I'm going to put up a couple of bids today and start buying it, because I think I'm going to do some more due diligence. But it sounds like this is one of the companies I want to own. It's got everything that I look for. Operational
and
excellence, consumer packaged goods, research and development, international expansion, U.S. consolidate. It's got it all.
This sounds like what Juju wants to become.
This sounds like what Juju wants to become. I wonder how many shares are out on this thing.
Here, let me tell you.
Yeah, you tell me, Ed.
Now I'm going to have to refer to go to my phone here. I'm not looking at personal things. I'm just saying for the audience. This is business here.
This is business. Ed means business.
I mean, I'm a businessman.
You're the business.
I'm a businessman.
You're the business, bitch.
Are you a businessman?
You're the businessman.
I'm a businessman.
I want to be a businessman when I grow up. Can I be a businessman?
What do you want to be when you grow up? I want to be a businessman.
I'm a businessman.
What kind of man? A businessman.
Okay, I think we've flogged that one to death now. Moving on.
I'm tired of being a businessman.
I'm sick of being a businessman. I
want to be some kind of other man. What kind of man you want to be? Okay.
Right.
What's the ticker
stock
for this
information? Hey, how about this, Ed? How about I just look at their website and go to the stock information section, and it should tell me financial
315
data.
to 328.
Book
Here
value,
we go.
not available.
Here we
Chargeable
go.
book, not available. Oh, this is a bad
62
thing
million shares outstanding, capped at 200 million. High for the year.
Whoa. 67 million shares outstanding, capped at 200 million. Oh, at today's share price of 345.
And this is what.
Sorry, how many shares outstanding? 67?
62.
62.
62.
Okay, so here's what we're going to do is we're going to go look at the vehicle that they merged with, because it sounds like they did an RTO into something a little baffed out, because they only raised $26 million, obviously at a higher price. So either A, they placed the money at the outset with the wrong investors. What do I mean by the wrong investors? I'll tell you what I mean by the right investors. So let's use Tilray for as an example of a company that placed the money with the right investors. They came to trade. There was no stock available because there were no sellers. Mind you, they were restricted from selling, so that makes it a very easy choice. Now we see that the restrictions are coming off. The share price is sliding on what I'll bet is primarily insider selling, or I shouldn't say that without full
not
knowledge.
insider selling, because they'd have to disclose it, and
Well, we haven't taken a look at the insider selling.
Let's take a peek.
Let's do that right now.
Let's take a peek.
That would be a valuable item for.
So we're now at 320. I'm pretty sure this thing came out lower than the original. So whoever bought this thing on the new issue price probably wish they never heard. Probably they're switching their broker.
Well, if you're in a tax loss selling frame of mind. So here's the thing. Why was tax loss selling so extra egregious this year? A, economic weakness starting in the fourth quarter, compounded by B, geopolitical instability as represented by, increasing tensions with Russia, China, the Middle East is, basically a write-off at this point.
Yes, yes.
But the other
Yes.
thing that is not largely considered is people made a shit ton of money in the first part of the year. So when everybody loaded up on marijuana stocks in January, that puts immediate downward pressure on the timeline for the whole market going forward. So, even if the shitstorm that was the macroeconomic picture did not occur starting in September, the market would have sold off anyways because there was all these stocks in the money. And then when the deal with Constellation happened in August and Canopy,
Yeah.
that was the moment everybody said, okay, that's the highlight of the year. Let's take some money off the table. People started taking money off the table in droves, and that catalyzed selling begets more selling, just as buying begets more buying, and boom, Bob's your uncle. There you go. The market's like shit. The thing's lost 30% of its value.
There's an interesting question right there.
Oh, Garrett Turner wants to know it. Hey, Garrett, how are you? We see you here all the time. We really appreciate your participation. Can you ask Ed and James to look up acrg.u? Looks to be a tremendous buy at these levels with the people on the board. Oh boy, Garrett, you just poked at one of the companies. Let's just say that we are the most skeptical of, and I'm going to tell you why. First of all was the way they came to market. They were going to raise $250 million, I think it was, at $22.50 a share. They broadcast to the market that the book was $1 billion, therefore they're going to raise the price to 25 and raise the amount that they were going to raise. I don't recall them saying a number, but I heard they're going to close the book at $500 million.
Wow.
And what happened? They circulate that. I was on the president's list for $100,000. I turned it down because I'm like, whoa. Wait a sec, you guys are sucking up all the demand for your stock in the pre-market, in this RTO. There's going to be no market when you're done because everybody who got any got as much as they wanted.
That this thing and...
See a chart on that, Ed?
It's up.
You got a chart up?
Yeah. Chart up.
Chart's up.
Chart up.
Chart up,
off.
chart down.
Chart up. Chart off. You know what? This has the same duration of trading as the company we just had up there. And you know what? The patterns are very similar. In fact, I'll go one further. The other one had 6 green and 19 red. This one's got 7 green and 18 red. The patterns are almost identical. Now, this seems to be a little more volatile. Yeah, I think you're probably getting close here for a buy. But, wow, this thing came out. Oh, my God. Oh, my God. This thing was up to $26.
Well, so it came at market at $25, Ed. It traded there for approximately 2 seconds. The reality is that I think they killed all the demand. The second thing is, if you go look in their listing statement, they're multi-state operators with operations in I think 17 states. If you look at the acquisitions, they paid for these things in shares priced at cost basis of between $4 to $7. Now, then they made all those shares subordinate to the super voting shares, which are controlled by one guy, the CEO, Kevin Murphy. Then they go out, they give $60 million worth of stock to John Boehner, former Speaker of the House. They give, I guess we get a Canadian discount, they give $7 million worth of stock to Brian Mulroney, former Prime Minister.
$7 million.
$7 million worth of stock. Here you go.
He doesn't feel guilty about taking them?
Well, why would you?
That
if you're Brian Mulroney, you're like, I only got $7 million. Why did John Boehner get $60 million worth?
Because he's American. Bigger fish, bigger pond.
So my view is on this, Garrett, his long-winded way to answer your question is that I think fair value of this company is as yet a bit lower, in my humble opinion. I'm not a shareholder. I had the chance to be. I turned it down. The whole structure is problematic, but a company that's willing to pay, give away that money of stock just to put a couple of, pretty impressive names on the nameplate of the board of directors that actually aren't going to contribute to opening doors or adding to the business. To me, it's just like I'm just nervous about management. I just do not have a great deal of confidence in management, and there's just a few things that I don't like about the company. Enough said, but I don't think it's a deal here. I think it's a deal at maybe, dare I say it, $1.
Yeah. Look, I can't. I mean, I was a broker for a lot of years.
Did you make a lot of people broker?
The broker, the broker you get.
You were a broker. You were broker.
He wants to go to the interview.
What interview?
What interview?
I don't remember any interview. Is there an interview around? No, you know what? We're enough speculating on the value of the merger between Aleafia and Emblem. How about we ask the CEOs, Geoff Benic from Aleafia and Nick Dean from Emblem.
Yeah.
We've got both Geoff Benic, CEO of Aleafia, and Nick Dean, CEO of Emblem, in the house to discuss the recent combination of their two companies in an all-stock transaction. Gentlemen, welcome.
Thank you.
Okay, so, sorry, got a frog in my throat. The first thing I want to point to here is that there were some discussions even just a couple of months ago where Emblem was contemplating being sold for $200+ million, if I'm not mistaken. Is that true?
That is not true.
Okay.
So look, we've had a number of discussions over the last year with different parties about bringing the company together or strategic partnerships.
Right.
But there was not a combination in play officially anytime throughout the year.
Okay, so investors on both sides want to know that they're getting a good deal here.
Absolutely.
So, I'm just going to play devil's advocate for the shareholders of Emblem because at a 27% premium, let's call it. So investors who bought into the company like even 6 months ago are not exactly going to be happy with that.
Yeah. So I think, we've been watching the forums this morning and we've seen some feedback from shareholders and analysts and it's a similar question. And I think what we really need to focus on in this deal is the exchange ratio. So ultimately it's a 0.83 exchange ratio. For every Aleafia share, Emblem shareholders will receive that ratio. So we will see upside potential as Aleafia shares appreciate into the new year, which we expect, right? We're looking at the market right now, and there's a lot of downward pressure on the category because of tax loss selling. I anticipate that in the new year, we're going to start to see that improvement again in the marketplace. As a result of that, our shareholders may actually see a more significant share price or transaction based on that exchange ratio.
I see.
I think it's also important to look at the pro forma, right? Emblem shareholders are going to get 41% of a phenomenal, medically focused international cannabis company. And this is going to give us a lot of horsepower to amplify our growth strategy. And there's a lot of accretive benefits and a lot of synergies.
Okay, so basically the Emblem shareholders should be happy because they're just transferring their upward rise into Aleafia shares from Emblem shares.
Correct.
Great. Well, okay, that's an awesome explanation. I'm going to keep my stock. So, Geoff, you are. How did the whole thing come together? Whose idea was it, and what was the sort of driving impetus behind it?
So I think it was collaborative. First of all, I just want to commend Nick and his team. Nick's done a phenomenal job at Emblem, and he's really transformed that business since he took it over or took responsibility as CEO. And I think that the whole Emblem brand is just really developed tremendously under Nick's leadership and his team. So I want to get that out there first and foremost. Second of all is that, I've never seen an industry that was so well capitalized, that is consolidating is commoditizing so fast. So it's one of these scenarios where you've got to look for great assets that can transform your business and that are complementary to what you're doing, and you consolidate. And so I think clearly what you're seeing here is that Emblem was a great opportunity, and we saw that. We saw that what Nick and the team were doing there was very complementary to what we're doing. Combined 60,000 patients, 40 clinics, all medical. Some of the brands that Nick had or has in terms of capsules, oils, and sprays. Sorry. It was just a phenomenal opportunity. We just thought it was a great time to move.
Right. So now it transforms Aleafia into more of a LP, and everybody rides off into the sunset, I guess. So Aleafia, how many consultancies are there right now? Clinics?
So right now we have 22, right? And with GrowWise, we now have 40 combined and 60,000 patients.
Wow.
And that's really the interesting part of it, right? Is the 60,000 patients that for the longest time have been, for whatever reason, not being able to buy medicine because of the shortage of supply. And so we're committed to our patients, as is Nick and Emblem. And we just think it's a tremendous opportunity to make sure that our patients are always in stock for medicine that they need.
Okay.
Right?
Does Emblem have the capacity right now to supply 60,000 patients?
We do. So I think the way that we look at this is we see this as probably the biggest benefit of the combination is that Aleafia has seen over 60,000 patient encounters. We then combine their incredible capability of bringing patients into their clinics with our GrowWise capability, where we're great at education and converting those into Emblem patients. So we see a strong vertical integration down the pipe, straight from patient acquisition straight through to patient conversion and retention. As Geoff has mentioned, we have a significant product pipeline, whether it's our dried flower, oils, capsules, sprays, soon to be tablets, and so on as we continue to product innovate. So you really are able to satisfy all of those patients' needs with the product that we have on hand, and that's where we see significant benefit in terms of not only revenue, but profitability down the line relatively quickly, because these are high margin products, which you and I have talked about, right? Our oils, we're seeing an average price of about $15 per gram in recognized revenue. When you move up the value chain into capsules, into oral sprays, that number only increases. So as we continue to broaden our product innovation pipeline, we think that that's going to be an incredible opportunity for the combined company.
And I really don't want Nick to underplay the crown jewel of the deal is the 30,000 square foot new extraction facility that Nick and his team have been developing. It's a great facility. It's going to complement our outdoor grow, which we've announced that we're going to be bringing out in April, biomass that we're going to be able to extract, and look for better margin opportunities downstream, as in edibles, et cetera, right?
Sure, let's talk about the outdoor grow, because that's going to be one of the first in Canada, I take it. And so essentially, are you going to be growing like a hemp variety of cannabis where it's low in THC, or are you just going to grow full-on cannabis sativa and indica?
So we're looking at wherever we can get the best opportunity, whether it's in CBD or THC. Obviously, this will not be, typical flower that you're going to inhale, right? It's going to be more biomass that we're going to extract and create some real opportunities downstream for great margins at, because this product, the extraction will be, or the oils that we'll get out of this will be very, very low cost. Much below traditional indoor and/or hybrid greenhouse grow.
Right. So we talk now about cost per gram in the 80 cents to $2 range. Do you have an idea what the cost per gram would be in an outdoor situation at this point?
So, I would say that we're probably in the 25 cents a gram range, and it's just a great opportunity.
Sure.
It really is.
Sure, okay. Well,
second
that's great.
Second mover advantage is phenomenal. You don't make the same mistakes that some of the market leaders did.
Right.
And you get to learn from them, and this clearly is that.
Okay, what's the size of the outdoor grow?
So we're going to do 30 acres,
okay.
Right? 30 acres producing about 60,000 kilograms.
Wow. That's exciting, and that's in Ontario?
Yeah, that's in Port Perry facility.
Oh, okay.
Right?
Well, we'll bring our cameraman by to shoot it when it's dry.
Idea.
Sure.
Okay, well, that's great. It sounds like a great transaction. I'm excited for you both. Thanks for joining us today.
Yeah, thanks for having
Thanks,
us.
There you have it.
Yeah.
Does that make sense to everybody?
Seems
now,
to.
Well, it seems to me that there's a lot of people who are complaining about this merger on the chats here. So let's look at a couple of the comments from viewers. We don't care about stage monologue. We heard the conference call already. Remy S. We don't care about stage monologue. We heard the conference call already. Well,
Staged monologue.
Staged monologue, he means. That's
Yeah.
just rude. BS, they grow for 25 cents. Raging Rick, this interview isn't live, so they are not looking at the No, not looking at the questions. Okay, so let's just tell everybody. Okay, people. We recorded this morning. Okay, so we recorded this morning. Now I've typed it in there for you as well. If you would like to ask any questions of us about the MJardin transaction, we will certainly pass them along to Nick Dean and to Mr. Benic.
No, MJardin. You said MJardin. You're talking about...
Aleafia and...
yeah.
Emblem.
Yeah.
If you want to ask us anything about this, feel free to shoot us a note. So, Nick James, lots of confusion in regards to Emblem publicly trading warrants. Are those getting converted to Aleafia publicly trading warrants? The wording in the press release is confusing. Yeah, they would have to be. So they have to be. They can't just cancel warrants. So that's that was live. My bad. Thought was live. My bad. Not live. Now we're live. Now live. There we go. How about that? I'm having a conversation with Remy S. He said thought was live. My bad. No worries. We love you still, Remy, even though we don't know you. But maybe we'll get to know you. Come on over. Let's have a drink and get to know each other.
It is the season.
Yeah. Okay. So Nick sold us shareholders out for $133 million. They have $143 million in cash. Warrants are worthless. Why would we be happy? Okay, Eddie. Let me tell you why I'm happy, even though I'm not me. I'm not a shareholder, but I'm going to become a shareholder because I think that the combined entity has a much better shot at creating profit in the near term than they do as separate entities. And I think that Emblem's been sort of one of the, was that a good deal for shareholders? Wasn't a great deal for shareholders. Now you're forced to ride the value of the combined entity in Aleafia. Is that going to turn out to have been a good thing? Well, we're just going to have to wait and see, but I suspect that it will have turned out to be a good thing once this company's able to combine the two entities, deliver product from within the organization to their client base. That's the perfect vertical integration that you want. You're right from seed to consumption. It's all in your bailiwick. So that to me is a winning transaction. Now, if you bought stock, let's see, what's the chart look like, Ed? Pull up a chart of Emblem, EMC.
Okay, it looks, it looks like most of the other stocks in the sector, it's been steadily declining. Oh, EMC hyphen, and that's CNX or CA?
No, that's the TSXV.
Oh yeah, that's what I thought. $2. So this thing got up to $1.14 today. Okay. So very short-term basis.
Yeah. So what's the high that it touched back there, and it looks like August?
$1.85.
Okay, so that's why shareholders are probably upset. If it was $1.85 back then, and they just sold it for what was the actual number? We don't have that press release here, do we? No, we don't.
No.
Okay, but anyways. So yeah, I can see why shareholders would be somewhat. Okay, so could you ask Aleafia to clarify if they have 60,000 active patients or just 60,000 patient encounters? That's a good question. Patient encounters, so somebody who becomes a patient without actually buying weed. That's going to be tough to answer. I would think that they're pretty much all patient encounters, but what remains to be seen is that are 60,000 patients going to now buy Emblem weed because they have been typically free to choose two growers if you're a patient. But obviously their clinics are going to be recommending Emblem, and there's nothing wrong with that. But Emblem warrants will receive upon exercise the same consideration they would have received if they were Emblem shareholders at the closing of the transaction. There you go. So the warrants are basically just going to become warrants of Aleafia now.
Interesting, though,
it was $1.50 earlier this month. So this is no VWAP. This is ridiculous. Okay, so shareholders are upset, and they are especially said patient encounters, which means not even necessarily ever purchased, just called or visited a clinic. Okay, so when they say patients, they don't mean customers at this point. But to Geoff Benic's point, he says we haven't been able to fulfill directly to clients because they're not an LP. So now it's an LP with a client base. I mean, I don't know. I guess I'd be upset if they sold it for $1.21 and I bought it 5 months ago for $1.80. I'd be upset. Mind you, if I was holding the company even without the transaction, it's still going to be $1.21. So now what they've done, they've taken advantage of the low price. Now you're 40% owner of what was formerly Cannabis is now Aleafia, and you've got a combined entity that's got a better shot. Again, I guess my opinion doesn't count for much because I wasn't a shareholder who paid more than the transaction cost. In fact, I'm going to wait till after all the dust settles from the tax loss selling season and now the rate hike, and I'm going to look at building a position starting either right at the end of the year, so the 27th, 28th, and or early next year. but I think that's another company that I think is now a great combination. So, okay, another question. I own both
that's a good
EMC
comment, yeah.
and ALEF, underwater on both. I'm very happy to hear they have been getting together. Okay, so there's a long-suffering shareholder of both companies who views the transaction in a positive light, and I really think that, you know, yeah, you can complain a bit about the discount that has been treated with if you're a shareholder on the Emblem side, but I don't know. I think you just got to step back and let this thing happen, and I think ultimately it's a stronger company and will probably perform better together than they would have separately. Would you say that's a fair call, Edward?
Yeah, absolutely. I mean, the fundamentals now, it's a better company, so if they were going to do business with each other, one would try to take profit from the other. Now that they've combined, the profit will go to theoretically will be built up together. Now, there's going to be a lot more shares.
Kathy Martin says, I agree that the combined entity is more valuable. Aleafia was formerly much higher, at $470 in September.
Yeah.
So good point. They're both down at a discount right now. Enough said about Aleafia and the other one. We'll get some clarification on some of these issues in a future conversation with both Geoff and Nick. The interview came up all of a sudden. I didn't have time to get... Oh, but still some people disagree. Horrible deal for us. IPO price, question mark. Well, got to look at the market overall. And Reefer Al Joint says, join the resistance. Okay. We have a question. And the question is coming up now.
Here comes the question. Drum roll, please.
Hey, my name is Liam. I'm from Toronto, and my question is regarding a few cannabis stocks. So my question is, what would you do with these stocks? Would you stay long, or would you kind of liquidate now? So the stocks in question are Canopy, Aphria, and ARAH. My average cost on Canopy is 11. ARAH, it's around 8, and Aphria, it's around 11. So yeah, what would you do with these stocks right now? Thanks so much for your help. Bye.
Well,
So
personally,
the three were Canopy, Aleafia,
and ARAH. Canopy, Aphria, and ARAH.
Right. And sounds to me like he's basically...
He's up on Canopy.
Yeah, big time.
He's underwater on Aphria, and I didn't catch the entry price on ARAH. So anyways, here's what I am doing. Never mind what I would do. This is what I am doing. Is in the case of Canopy, I mean, if you're going to sell it now, if your buying price was $11, there's nothing wrong with taking money off the table. However, you're still way up. So not only are you locking in the loss, you're locking in a tax obligation. Here's what I would do. I would sell the Aphria, take the tax loss. Anything you're underwater, blow it out now, because that's what everybody's doing. That's one of the main impetuses of this market earlier. You're going to be able to buy it back. Wait till after the 27th. Now you can account for the tax loss in tax 2018, and you can buy back the stock at a discount in 2019. That's what I would do.
But if he's going to take the loss, he should...
What's up, Doc?
Yeah, what's up, Doc? He should take enough of a gain on the other side so there's no tax problem.
Well, that's just it. You're able to neutralize tax. It depends. We don't know what the size of the positions are.
Right.
But Mr. Lou 1990, hello, Mr. Lou 1990. We see you here all the time.
Yeah.
He says, sell weed, buy ARAH. That's one man's opinion.
Yeah.
Sell weed, buy ARAH.
Right, and maybe sell the Aleafia to offset the gain. If you're gonna, Aphria.
Basically, any stocks you bought after September, sell them and lock in the gain, lock in the tax loss. Anyways, it's really a personal matter. We can't tell you what to do. We only tell you what we do. We are not qualified nor registered or licensed to give advice, so we can tell you what we're doing. That's what I'm doing. I am selling off a bunch of stuff to block in a tax loss.
There's some really sage advice from Kempo Consulting.
Aphria, dump until Ed becomes CEO, then buy back in.
There you go.
Yeah, anyway, what about us, though? Is it over? Ed's leaving us to become CEO of Aphria.
Remember Roy Orbison?
Hey, actually, you would make a good CEO of a marijuana company because you're a man who likes to get high on his own supply.
I'm high. We've sold out again this month. Why? The CEO just bought all the inventory.
The CEO is smoking like 2 pounds a week. That guy smokes a lot of weed. 80 silver. Oh, sorry, that's a previous question. I'm looking at. Okay, Thrice Hybrid says, what if you were trading from a TFSA? You can't claim that as a tax loss, can you? Well, that's a good point.
Yeah.
But so everything in your TFSA is a win. So if you're down in that portfolio, I never think it's a good time to sell at the worst time of the market. This is definitely the worst time of the market
so far.
At this point, right? Now, if things turn around in 2018, so let's say tax loss selling was definitely going to be over in January.
Yes.
We just got the rate hike that nobody thought we were going to get, so the speculation is over. The guy's going to raise rates. So I think Jerome Baker made an excellent move there. He told the president, here's what you can do with your, you don't think it's a good idea. I'm going to do what I think is good for this economy because I'm the governor of the chairman of the governors of the Federal Reserve Board. I'm going to demonstrate my independence from the judicial, or rather from the administration of this country. I'm going to exercise my responsibility to, to bring the value of money back. But so, anything in a TFSA, I would wait for greener pastures before I would think that I was going to lock in the win. You got to look at this market and say, is this it for the cannabis stocks? Is that it? Was it a bubble? Is that what everybody's wondering? Was that a bubble? Here's what I can tell you. This ain't no bubble. You're coming into a period in human history.
The bubble's been burst.
Well, it's more like a pair of lungs. A pair of lungs. You inhale, you exhale. That's a healthy set of lungs. If you just inhale all the time, your lungs are going to burst, and that's a bubble. So are your lungs a bubble? No, your lungs are healthy. You're inhaling, you're exhaling, and that's what the market does in a healthy state. So definitely tax loss selling. I think that the cannabis market, we're going to look back on this weakness, and it'll be like, oh, well, yeah, those boys were right. It was just another period of weakness brought on by a convergence of circumstances like tax loss selling, macroeconomic uncertainty, based on interest rates, geopolitical confusion, and I forget to toss Brexit in there. Now that whole European situation is quickly deteriorating into a dog's breakfast, which I don't think is building confidence for European investors who are very much active in Canadian markets. So they're probably all like Chicken Little, left, right, and center, run for the hills, but that's just not the thing. So the tax loss thing is a good thing if you've got tremendous gains to offset it. But the idea of selling it in a TFSA right now just because it's down, personally, I wouldn't do that. I don't have a TFSA. Do you have a TFSA, Edward?
Yes, but I'm not really proud of the fact that it's almost worthless.
Well, that's just it. So the reason I don't have a TFSA is because I'm afraid that the government, if I put a bunch of money in there, and then the government's going to say, well, no, you trade for a living, so
trader.
It doesn't count. Exactly.
Yeah.
And so there's
but
no
if you
point.
keep losing money, I'm not sure that argument about trade for a living.
I don't trade for a living. I lose money for a living.
I trade for dying. Financial death.
That's right. I heard a funny story. So this buddy of mine was telling me a story about his dad. Is this a real story? This is a real story. This is great. So a buddy of mine takes his father to Vegas for their birthdays, which are one day apart in July. It's in the desert. The guy happens
what time
to be...
is it?
Ding, 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 ding.
Off to Vegas.
Off to Vegas. And anyways, cut to the chase. The guy wins there's a program with that. All the machines are linked. And if you win the best prize, the guy won actually $700,000 USD in a slot machine.
Come on.
This is the guy's father on their birthdays.
True story.
True story. So
they both had a birthday?
Apparently the son's birthday is the day after the father's birthday.
Oh, that's convenient.
Yeah. So anyway, so they celebrate the birthday. The father wins $700,000, but the government takes 180 of it off the top.
In the States.
And the fine print at the top of the machine says, we have the option to pay this out over 20 years as an annuity. This guy's, his father's 68. He's not in the best condition on a health basis. He's had cancer. He's had all these problems. This guy says to them, he's like, look, I don't even buy green bananas. I want the money now. I'm 68.
And what did they say? Go fish.
He took a discount. He ended up gave $180,000 to
He ended up owing money.
No, he ended up with getting $500,000. I think USD was the final number, but yeah, he won. He basically won 500 grand.
Yeah.
He was not in the best financial health either. Anyways, I thought that was a great story. But the government took 180 grand off the top in taxes, and the only way he could have got it back was if he had 180 grand's worth of gambling losses in that year. So if he had 180 grand in losses, he would not have got that.
Right.
So
you can't
anyways,
offset gambling losses to stock market gains.
This is the point. There's a moral to the story in
The matching concept at work.
I guess.
Well, yeah, I'm not sure. I agree. You know, not that I'm trying to give our host here a rough time, but I'm not sure. I think it was a bubble.
You think the cannabis market was a bubble?
Yeah, I bet. Yeah. I think that when the valuations get a little more, and they're doing that now, then it becomes no longer a bubble. But yeah, when you see things drop that much from highs, I'll tell you, it's rare you see them really.
All right, let's cut to let's take this thing a notch further. When a bubble bursts, what have you got?
You got suds. I don't know. What do you got?
You got nothing. Is there nothing left in this market?
No, there's.
So I've always had a problem with the bubble analogy, first and foremost.
Okay, I see what you're
Because, there's contraction, there's expansion. When capital comes into a market, it expands. When capital leaves that market, it contracts. Those are the normal functions of a market. A disagreement of opinion on something's value is what makes a market. So money comes in.
Okay.
I say, this is not worth the money it's written on anymore. I'm going to sell it to this idiot who thinks it's worth more. Boom. There's a transaction. Market, arguably, price goes up. Guy comes back and says, you know what, you sold me a stinking piece of crap. I'm going to sell it for cheaper than you sold it to me for because I don't want to own it. Boom, market goes down. Anyways, yes, in the TFSA, you cannot claim a loss, is my point, because it's already tax-free. If you lost it, you lost it. And so I'm wondering, is there a condition whereby the government will say, well, we thought you were a professional trader because you trade every day, but turns out you're a horrible trader, so we're going to let you keep the TFSA.
They started out with 100 automobile companies at the turn of the century, and there's only like 3 left. Mm-hmm. Well, maybe not 3, maybe 4 or 5, but certainly United States. So was it a bubble for the ones that aren't no longer here? The ones that still survived, they were in a bubble. But the ones
that's
that are
the problem with the whole bubble analogy.
Okay, I see your point.
If you're going to talk about a drastic contraction in the market, i.e., a majority of the capital leaves the space and prices discount to below 50% what they were, that's what I have a problem with a bubble analogy. A bubble burst, there's nothing there. And so people get that in their heads. If the bubble bursts, it's going to zero. It's not going to zero. It's never going to zero. It will never go to zero.
There's no such thing as a bubble.
Well, there is a bubble, but it's the kind that you blow with, dipping your little thing into soap suds.
Well, let's take a look at the S&P.
See, James Albert wants to argue with me here. He says, absolutely a bubble, but valuations will catch up as the sector matures unless there's some catastrophic finding regarding cannabis. The future is bright. Okay, well, so there again, I have a problem with the definition bubble. Because if you're talking about a market, which is what we're talking about, it's natural for it to contract and expand with macro catalysts, geopolitical, da-da-da. All right, let's move on from that, shall we, Edward? Okay, now, here's a little treat for y'all. This is our Christmas gift to you. Here are some of Midas' most precious moments of the last year. Hey, how's it going, everybody? This is our first time doing an interview live here. Peter, this is your first time as the new CEO of CannTrust. My guest this segment, as promised, and only 2 minutes late, is Mike Gorenstein. He's the CEO of Cronos Group. Mike, thanks for coming back.
Thanks for having me again.
My guest this segment is John Fowler. He's the CEO of Supreme. Supreme is now trading on the TSX Venture under the symbol ARAH. John, thanks for coming back.
James, always a pleasure. It's been too long.
My next guest here is Sean Dollinger. He's the CEO of Namaste Technologies. Hey, welcome back to Midas Letter Live. My guest in this segment is Brendan Kennedy, CEO of Tilray Inc., trading on NASDAQ under the symbol TLRY. Brendan, thank you for joining me again.
Thank you for having me. I'm obviously supporting you because you are the last stop on the media mayhem before I go back to regularly scheduled programming. So, James,
yes,
talk to me.
All right, Bruce. The Constellation deal. Now they've given you a valuation of, what is it? 38%. Let's back up here.
So it was about a more than 50%.
51.2% premium to the average closing price on August 14th.
Yeah.
They are 38% owners with the rights to buy up to 51%?
Up to 50. So the way it's structured is they were at 16.4% because if they exercise their 2 warrants, which they don't currently have access to both pieces, but if they did exercise, that would bring them to 16.4%.
Okay.
So they were buying a little bit less than 25% of the company for a little bit more than $5 billion.
Cam is here from Aurora. We're going to talk about the Aurora CanMed merger. First thing I want to ask you, Cam, is how did a war become a love affair?
Because we are all good business people.
Ooh, that's a very political response.
I don't think it's political.
It's
polite.
Oh, okay. Mike, you put out a press release today. I don't know whether you did that to help today's content, but you have now closed the $100 million bond deal, which we were talking about the last time you were here. So we also sent Fraser out with camera crew to shoot you guys out in Stayner, Ontario. And so what's going on with Kronos now that you've been on NASDAQ for almost, 2 months?
I don't think it's even been 2 months, probably about 5 weeks. Time flies.
Okay, because I noticed right away, as soon as you went on NASDAQ, that your stock volume on NASDAQ was 3 million shares versus 2 million shares on the Canadian exchange. So is that still the case? Are you still trading a substantial increase in volume on NASDAQ versus Canada?
I'd have to check, to be honest. I focus more on the business than on where the trading activity is. I'd say probably
not watching your share price.
Yeah, it'd be pretty tough if I stare at the screen all day.
Elias, you've been working with the anti-doping agency on their medical marijuana policy for athletes during in-competition periods. You want them to allow the use of cannabinoids as a recovery tool.
Yeah, moreover, allow them to recognize what my doctor has already diagnosed and prescribed as a medical cannabis patient. So what comes into play is the fact that obviously being in Canada, we have certain medical guidelines, etc., and a process that we are doing. And USADA, the anti-doping agency, is an American base. So there is a little difference in regards to the way they treat medical cannabis.
My next guest is probably one of the most recognizable figures from the famous film The Big Short. Danny Moses is currently also a very long investor in the cannabis space.
So getting out of the hedge fund business a couple years ago, I decided that I would take a look at cannabis just as an investment opportunity. And me, like many other people who hadn't been involved in cannabis for the last 5 or 7 years, thought of cannabis opportunity as your friend from college or high school that moved to Colorado that decided to grow weed and sell it. And it really wasn't a real business, so to speak. And after I got over the kind of the stigma and obviously that ignorance that I had about the space, I started to realize that there's a lot of business opportunity here. There's health benefits, there's economic benefits.
What has been happening lately with Supreme? You've been doing lots of stuff, seen lots of news. What's the upshot of what we're seeing in 2018?
So we've got 2 primary initiatives on the go at Supreme, and one is completing 7 Acres development as Canada's leading premium rec flower brand. So
I have a T-shirt that says 7 Acres.
Fantastic. I hope you wear it with pride.
I do, in fact.
I think, you hear a lot of people talking about the flower business being something that's shrinking, being something that's small. We're seeing it's 40, 50%, sometimes more of mature U.S. markets. StatsCan recently said it's close to 80% of the Canadian market.
I saw your tweet.
It's a very hard market to do well in because, like growing wine, it's not just producing good grapes, it's finishing a good product.
Can we start with what is your role with Chiron Life Sciences?
Well, I'm very honored to be now on the board of directors, and I'm very happy with that. This came about when they came to our event in Mexico, this first Canamex World Summit on Cannabis. We met there and we found out that we're twin souls, that we not only want this business sector to progress, but that we want to be responsible, socially responsible with people. I think that this industry can bring peace and harmony to places like Mexico, to places like Central America, where we have such high levels of violence, and that we need back our youth that is being killed in the streets of Mexico, that is being hired by the cartels, and we need to rescue them. And so I think this is a paradigmatic change.
Elias, do you think you could kick my ass in an MMA cage fight?
Yes, I do.
Is he from London by any chance?
Who? Elias?
Yeah.
No, he's a Toronto boy.
Okay.
I think. I didn't ask him that. But if I was a guessing man, I would say he's probably the son of Greek immigrants from the Danforth, Canada's or Toronto's famous Greek neighborhood. But I don't know. I haven't talked to him about that. We have to have Elias back. He went on to win that fight that he was here for prior to.
Really?
Yeah. Yeah. So, anyways, there's some great moments from the last year, and that's
sure. Lots of
look at those hairdos, eh? Like, oh my gosh, I don't know what's happening here, but
yeah.
gonna funk up the hairdos. Anyways,
funky cold Medina.
Funky cold Medina. Midas Letter, you really have to update the music. Try Ohio Players for something more modern. Well, Keystone Record Pool, I have got some news for you, but we're going to be rolling out a brand new graphics package in 2019. We've got a brand new set coming together that's going to make you go, oh, James and Ed think they're in the big time now.
Big league.
We've got
Big
a studio that we're going to start broadcasting from in Los Angeles. Edward and I are going to fly down there 2 days a week. Did you know that, Ed?
Really?
Yeah, we're going to spend 2 days a week in LA. We're going to be focusing on the U.S. cannabis growers down there. And then we're going to launch in London later this year. London, England. So you'll be going from London, Ontario to London, England for your commute. Woo-hoo!
Really? I can honestly say I'm in London.
Yeah, you'll be in London all the time. But yeah, so this year is huge. And of course we will have an update on the music. We are currently auditioning new music, and I've heard a couple ones I like. But the thing I like about that song, so that song was by some guys called the Jingle Punks. And I want to give a big shout out to the Jingle Punks. That music was in the YouTube free music section. So they've got a section. If you're a YouTuber, these guys have donated music that we get to use for free. And so that was by the Jingle Punks, which if they ever came to town, I would definitely go see them. And I hope they do. We got to find out more about them.
Do they have their own sort of version of Jingle Bells?
I can't remember. They do have a bunch of songs up there on YouTube.
I think that it'd be only appropriate the Jingle Punks did a version of Jingle Bells.
Right. Jingle Bells.
Jingle Punks.
Jingle bells, jingle all the way. Hey, this is the time of year to be seeing that stuff, isn't it? Okay, the market's closed now, Ed. Enough of your insolence.
Yeah.
Tell me what's going on. Talk to me, baby.
Interestingly enough, the 10-year rate in the U.S. dropped dramatically today.
The 10-year rate?
Yeah, the 10-year rate dropped dramatically as they raised the...
Short term?
Yeah,
Really?
Which is,
So what is the 10-year rate at now?
Closed today, it looks like around 277. So just put that in perspective.
So are people selling these bonds to buy the 2 years now? Is that what's happening?
That's I don't know.
Not that
all I know is they can control short-term rates, but longer-term rates are controlled by the buying and selling of the securities. So people bought those securities. By buying those securities, the price goes. I'm getting this backwards now. Because they bought the securities because the price went up, yield went down. So they are buying them because they're worried about the contagion that's spreading rampantly and rapidly throughout the equity sector. So in early November, 5 weeks ago, that rate was 325. It's now 277. That's a big drop.
Yeah.
Big drop.
So,
in fact, put up the chart here.
Does that mean, does that
Here's
necessarily follow then that borrowing longer term money is going to get cheaper and shorter term money is going to get more expensive? Is that the bottom line?
See that this is a 1 year chart, and I'm just going to, I think this is important. We had a little double top here at around 3.25, 330 in that area. We had major support here. Well, actually. And then we broke out of this pattern here, and it looked like rates were going higher. And now, ever since the market started to crap out, rates are 10-year rate, which is the bellwether rate, is dropping quickly. So Ben is on the line.
Ben is on the line. Hey, guess who's here?
Guess who's here?
Guess who's here?
Ben.
Ben
is here.
Where's Ben's roll-in blooper, what do you call that? Top and tail. Oh, okay. We got to make Ben a rock star, too. Hey, Ben, how's it going? Boy, am I drunk or are you blurry?
What's
We've got to do something about the Skype connection. Yeah, it seems to be a little bit blurry.
Yeah, I think it's your camera. I don't think it's the connection.
I thought you were...
Yeah, okay. So how are you doing today, Ben?
Yeah, I'm doing well. Just following the market, and things are a little bit slow on the news front. But and of course, we had the Fed raise rates today, 25 basis points. So there's a lot going on. Cannabis market, not so much, but it's getting that time of year where the news flow starts dying down a little bit.
Yeah, well, okay, so we've actually been having quite a hot news day here, and the discussions on the in the YouTube chat are particularly active today, especially as the merger between Aleafia and Emblem Corp has created dissent among shareholders. Some of them feel that they've been led down the lane. They've been sold a bill of bad goods. They've been ripped off, shanghaied, kicked in the can,
bent over,
kicked in the patootie. And other shareholders think that the combined entity is stronger and has a better chance of performing well together than they would apart. I'm on the latter camp, and Ed, I think you're in the latter camp
I'd
too.
have to say, yeah, no question. Better fundamentals now.
Sure. So what's your take on that, Ben? Did you have a chance to look over that press release?
Yeah, I did have a chance to look over the press release, and I think I'm in your camp as well, James. I think it's important that investors not look about where the share price was and where it is now, and just to extrapolate conclusions based on perhaps they're not getting the return that they envisioned in this sort of release. I mean, current realities dictate that these mergers between some of these juniors have to happen, because some of these share prices with some of these companies may not be coming back anytime soon. They might find it hard to raise capital. And I've been arguing and writing about on Midas Letter that this merger and activity in the junior end of the space is definitely going to heat up. We saw that last month when G-Tech and Invictus got together, and this is more along the same line. It's either get together with some of these juniors or get steamrolled or run out of capital. So I'm of the latter camp.
Okay, great. And then earlier, we were having a discussion about whether the cannabis market is a bubble that has now burst. And Ed here was leaning towards the idea that it is indeed a bubble that has burst for the time being. Whereas I'm more or less just saying that this is natural and healthy market fluctuation based on macro catalysts that are always a feature of the global financial landscape. So be interested to hear your take on that as well.
Well, yeah, I think it's hard to say that a 50% pullback in many stocks and 45% in the sector since legalization took place is a healthy pullback. I think it's a little bit more than that. And there was definitely some froth in the sector that had to be taken out. I would agree. And I would argue that a lot of that started to happen when GMPs downgraded earnings for Canopy Growth, and that was a de facto downgrade for the sector, in my opinion. some of the analysts' early expectations for the way revenues were going to be in the first couple quarters post legalization were a little aggressive. So that's what kind of kick-started everything. Now, that being said, I'm a big believer in where cannabis is going for the long term. So if you have a longer term view, then things look very rational at the present time. But I think there could be some consternation or some believability issues with some of the analyst predictions going out for full year 2019. Because we've seen a lot of those estimates come down. So I don't know if investors know really what to believe. We all know it's going to be a big story, but how big that story is in the next 3 or 4 quarters, there might be a little bit of wiggle room there.
Interesting. Okay, well, great. So then, we're sort of winding down the year now. The tax loss selling has been, relentless. The additional influence of the macro political picture, Brexit falling to pieces, China and the U.S. having what could evolve into a broader trade war. Now interest rates up 0.5 point. What's your take on the interest rate situation, Ben? Do you think that is a net positive for global markets?
Well, interest rates rising, I don't think it is a net positive, of course. There's already some debate that if the Fed raised today, they were already too tight to begin with. So many people expected that they wouldn't raise at all today and sort of go on a holding pattern for the next couple Fed meetings. So obviously they went ahead and raised, and the market reacted adversely to that. I'm of the camp, though, that believes that whether they raise more or not, it sort of doesn't matter. I mean, if you look at history on aggregate, whenever the Fed stops raising, whenever that cycle comes to an end after a long tightening cycle, that's usually not particularly good for stocks anyway. So whether they raise more or not, it could create a little bit more collateral damage and a little bit, not be pro-economic positive, but the tightening cycle has already happened, and business cycle downturns are just sort of a reality. So it's something that likely the economy will have to face, regardless of whether the Fed tightens more or not.
Yeah. Well, good. Okay. So then, what's your big picture outlook for 2019 in terms of what you think you should buy and what you think should not buy?
Well, in terms of the cannabis sector, I've been saying all along that I think price points matter now. Unlike previous periods where you could get away with probably, with the FOMOing a little bit, paying up for things or paying for the wrong stock, price points are going to are very much going to come in focus right now. So I think everything's going to be fine. But the 2 key points I'm hammering home for next year, if we do have a recession, and usually stocks sell off a year in advance, we may be seeing that now, we may not be. We could have a strong first quarter in 2019. We don't know yet. But the main theme, I think, for investors, and cannabis investors in particular, is have good entry points and don't over leverage in case things go a little bit pear-shaped and you get in situations where you have to sell. You don't want to be in that position. But no question, there's a lot of good deals coming with the right stocks, and for people with a long-term minded view, they may want to grab some of these dips, and they'll be happy in the next 4 or 5 years.
Okay, great. All right, well that's great, Ben. Thanks very much for your participation. We'll talk to you soon.
See you soon,
thanks,
Ben.
James. Thanks, Ben.
See you. Everybody you speak to has a different opinion.
That's true.
Some
Opinions
are
like
opinions
are like sphincters. Everybody's got one.
I've heard it said another way.
A little toilet humor to kick off the end of the day. So now what, Ed?
Well,
now what?
It's interesting. I'm looking at a chart of the other thing I saw here. I'm jumping around in my own head, so that's why I'm sounding a little scattered. But Amazon hasn't set a new low yet, but it's got an interesting formation. That's certainly a bellwether stock, because it was one of the only other company that got over $1 trillion valuation was Apple.
Yeah,
and they're both well below that now. Like this is I think someone handed me something the other day saying the 30 top companies on the S&P were all down by 20% or more. Some 30, you know. It's look, we're seeing some things happen, and the question will be what's going to follow. Like if we keep getting erosion, it's going to affect everything, right? Like there's a big money involved in this whole thing.
Yeah, the reason, I am a terminal optimist.
Yeah.
In that, first of all, I think that there's so much political interest in a stable economy that going into an election year, which 2020 is, and so which means they start preparing for that in 2019. So Trump is going to be highly motivated to do everything in his power to stabilize the political instability. At some point, is the issues surrounding this problematic president intensify? I think he's going to start to, I can't believe he'd be that blind not to see that changes have to be made if he's to survive this term without getting either shot, tossed in jail, or impeached.
Yeah.
So, I got to think that there's going to be cooler heads are going to be brought to bear on the situation with China. I think the Brexit thing is going to result now in a second referendum, the toppling of May, and I think ultimately Brexit is dead. Brexit should be dead because all it is ongoing uncertainty and ongoing deteriorating confidence in all things British. So, if I was an English investor, I'd be saying, you know what, there's no point in putting any money until we know what's happening with Brexit. We don't know what our universe looks like.
I don't know the European situation as well as you do, but if I was, this is maybe I'm just always in the smaller perspective, but I like the fact that Britain's going alone. I like that because I think Europe's a mess. I really do. I think Europe's in terrible shape.
Well, it is in terrible shape, but it's the fact of the matter is the planet's in terrible shape. There's too many bloody people competing for diminishing resources. So, and the universe doesn't care about us. And the universe will always inflict what are the real laws of the universe, such as the law of proportionality. And if you look around the universe, there is no circumstance where something is allowed to proliferate in perpetuity and to its maximum volume potential. It's always brought back to bear by other influences against whose interest it has acted by growing so large. The human population is a case in point. The message from the universe, should anybody be listening to it, is clear. Reduce your population or you're heading towards a premature extinction. Funny promoter guy in Nevada saying we're going to move some people to Mars, notwithstanding, it's like it's lights out. What? I didn't hear that.
Yeah,
my thing popped out of my ear.
It doesn't look, but it's, I can say for the last 10, 15, 20 years, I thought when the bubble happened in 2000, I thought this can't go on, and correct it and away we go. Yeah. So maybe we get a major correction for a few months and then turn around and up we go again.
Martians could arrive. Donald Trump arrived, could be Martians. How about that David Icke fellow who says we're controlled by lizard people who actually operate from their base station in the moon? All bets are off here.
Whoa.
Now that's if people are dumb enough to vote for Donald Trump, then
well, you know what?
Then there's no hope for the human race as far as I'm concerned.
Okay.
That's all I have to say.
On that bright, cheery note,
we wish you a Merry Christmas. We wish you a Merry Christmas. We wish you a Merry Christmas
and a Happy New Year.
Bye, everybody.